Another volatile session, and then even with the biggest weekly decline in about 10 years, it seems there's no kind of upper limit yet when it comes to gains.
Yeah, big change from last week. We've got oil prices rising again as the European Union announces it is looking at imposing new sanctions on Russia. And at the same time, Saudi Arabia's state-owned oil company, Saudi Aramco, hiking its prices for all its buyers, all regions, the U.S. and Europe, as well as Asia. For instance, the price hike for one grade called Arab Light is now $4.40 a barrel higher than a month ago. One UBS commodity analyst says, quote, "It is a massive increase." Now, 60% of Saudi oil shipments go to Asia. You've got China, Japan, and South Korea, the biggest buyers. So there's going to be a big hit here. And if we look at the impact this is having on the market, we're already seeing prices go higher. In the U.S. session, it was very volatile, a 4% gain, pushing oil above 103. And then in the Asia trading session, we're already seeing oil, West Texas Intermediate, up another $1 to above 104. Brent crude also jumping in the latest session back above 107. And as Heidi mentioned just last week, we saw the biggest drop in both Brent and West Texas Intermediate that we'd seen in 2 years. And over the weekend, Vital, which is the largest independent energy trader, had put out a warning or a comment that, hey, these depressed prices where we saw oil retreat are unlikely to sustain because you still have risks related to Russia and related to supply play out. The analysts thought that prices would move higher, and we're already just 24 hours later seeing that play out.
And yet, Sue, many companies still buying their metals, at least from Russia.
Yeah, a lot of people don't realize that the metals remain largely untouched by any sanctions. And in fact, many traders and fabricators are locked into long-term contracts where they can't get out of them even if they want to. And we're told that many are trying. If we drop into the Bloomberg, where you notice commodities have been on fire just in the last quarter, we again had a record surge in commodities prices. Metals make up a big part of this index. And one of the reasons that we're seeing prices move higher is the fact that supply is short. Russia, in fact, produces a lot of the key metals: copper, aluminum, palladium, platinum, steel, nickel. And so many of these traders and fabricators depend on Russia, don't have a choice. And then there's the commodities merchants, which have a well-earned reputation of being buyers and financiers of last resort when others have backed away. Bottom line, there's still a flow of these Russian metals into the rest of the world. In fact, notably, last month, 12 copper industry reps at the LME, the London Metal Exchange, were asked whether Russian metal should be blocked. Most said no, whether they should block it from its warehouse. But when it came to aluminum and nickel, advisory groups were asked whether they should block these metals coming from Russia. The consensus was no. They really need them. So it's a quandary for a lot of the metal industry, a lot of angst. Those who are trying to get out of their contracts are trying very hard to do so. Meanwhile, coal prices here in the U.S. surging above $100 a ton for the first time since 2008. This has to do with the surge that's taking place around the world because of the price up after the Russian invasion of Ukraine.